Hi, this is Kerry Artak with Artak Advisory, bringing you the AgriTalk video supplement for AgriTalk PM show Monday, October 25th, 2021. Before I jump into the charts, if you're at the website or if you're not even at the website, please go to the website, artakadvisory.com, A-R-T-A-C, the word advisory.com. Obviously, if you're watching this video, I'm just thinking right now that you are at the website. If you haven't taken the free trial, the 2-week free trial, please do so. Even if you've done it, but you haven't in 6 months, I offer another 2 weeks, no obligation. I don't put you into email marketing. You'll get inundated with constant emails. That's just not my style. If you get any email from me, it's because you probably want to see it. I'm notifying you of some new product or something, but I really don't do sales emails. I will, during the free trial, give you a call, usually early in the free trial, talk to you about your trading, so forth and so on. But you click that free trial link on the website itself, and you'll have access to everything that I put out on a daily basis for 2 full weeks. Anyway, let's jump into the charts. I cover this week December corn, December heating oil, and December lean hogs. And we're starting with the corn chart here. You can see this is really the big picture. All of these levels are sort of annual to quarterly containment. And right now we've got a descending channel top at 582.5. That may be in reach by the end of the year. I'll get to that in a moment. I would need a buy signal above a key level in order for that to occur. And below which 464.25 is a long-term support area. Both of those areas may be in reach by the end of the year, but I kind of doubt it with regard to 464.25. Let's take a look at the December only chart, and you can see 555.75. That level is actually in reach over the next couple of weeks. 555.75 can contain at least weekly, possibly buying pressures through November trade, and once tested, the market can fall back perhaps to that 497.5 low area that we've been sort of plodding along since the May low, which was 500.25. By the way, we dipped below 500.25 in early September, put out a 497.5 low, and we've been in this sort of two-sided framework ever since. So closing above 555.75, that 582.5 longer-term resistance area is just another week or two away where we can top out really through winter trade. And once we test 582.5, the broader corn futures market can fall back into later winter, into spring even, fall back all the way to 464.25 over the following 3 to 5 months or so. But if we close above 582.5, that 708.75 formation becomes the next realistic longer-term objective, and I would give that 3 to 5 months, maybe longer. If we were to close above 582.5 by the end of November, then we've got December, January, February, March, April. Yeah, I'd say by May, June, we would reach likely that 708.75 formation, which could contain buying through summer trade if tested. And I think that kind of covers it for December corn. I'll finish with the fact that if we did close below 497.5, the 464.25 long-term support level just a few weeks away, where the broader corn market can bottom out through 2022. Let's move on to December heating oil. I had a buy signal in later September above that 2.3198 channel top, then indicating 3 to 5 months bullish continuation to the 2.9237 channel top. And that still remains at play. We're about a month into that buy signal, and we're about halfway there. So we may actually reach it by the end of the year. What is a 3 to 5 months could actually turn out to be more like 2 to 3. Along the way, this 2.7165 channel top has a lot to say about it. This is a formation that if tested this week, and I don't think it will happen, just given the fact that last week we put out a new high and fell back to close negative on the week. So I do think it'll be a bit of a hard-fought battle for heating oil to reach 2.7165 this week. But if we do test it, it can contain buying through November perhaps, And once tested, the market could fall back within a month or two to the 2.3198 level, which is why I call it more of a 3 to 5 month buy signal, because there's trouble on the way up at 2.7165. But if we close above 2.7165 at the end of this week, we're just another 2 to 3 weeks away from reaching that 2.9237 target, where the broader heating oil market can top out through 2022. And if we were to close back below 2.3198, and that's a long shot right now, then we have a good high well into next year. I'm not even prepared to say where that market will go, but I do know that it's around 1.5. I just don't have an exact number for you, and that would take probably 3 to 5 months to reach all the way back to 1.5 on this chart. And finally, I've got December lean hogs. We'll be rolling to February in the weeks ahead, but right now, December is on this weekly continuation chart. We do have 71.77, that speed line that we tested about a month ago when we rolled from October to December. It did contain selling pressures at the time. We got a nice rally. In fact, we rallied all the way up to this channel top this week at 84.80, and following the test of that channel top, and we hit that sucker right on the tick. Just about. It contained, I'd mentioned at the time, it could contain monthly buying pressures, possibly into later December contract life, and once tested, the lower 70s in reach within several months. And here we are, about 5 weeks later, we are now approaching that long-term support at 71.77. 71.77, looking at this chart, is the start of a range of meaningful support down to 69.82. Yes, it's about 2 points wide. It can absorb selling through the balance of December contract life. And once tested, this market can stabilize following the 3-4 week sell-off and actually turn higher. I don't know about 84.80 anymore by December expiration. It is possible, but I have my doubts. I will say that 71.77 speed line can absorb selling with regard to the broader market, including the February contract, etc., through winter trade, and above which we could, by summer of next year, over the next 5 to 8 months, reach back into the very low 100 area. So, and you can see that on this chart here. And while I'm at this December weekly chart, if we were to close below 69.82, this market enters another sell phase. That 56.42 long-term channel bottom, then expected within 2 to 3 months. That would likely be a February contract test where the broader lean hog market could bottom out through 2022. And I think that's all that needs to be said for this week's AgriTalk video supplement. Please fill out that free trial form. Take it for the 2-week test drive. You've got really nothing to lose with a free trial, but a lot to gain in terms of directional clarity and the sharpening of your awareness of all the markets that I cover. You have a great day, and thanks for watching this video.